Hi, I'm Sylvie from HR.com and I'll be your webcast host today. We're happy you could join today's webcast, The Cutting Edge of Diversity, Equity, and Inclusion, California's New Pay Data Reporting Law and Beyond, sponsored by Trusaic and presented by Joanna Kim Brunetti and Mark Dwyer. This webcast has been pre-approved for one HRCI business credit. Please be sure to attend the complete webcast in order to receive your credit. Throughout the webcast, you're welcome to submit your questions using the Q&A tab on your controls, and we'll do our best to get to them. And it's now my pleasure to introduce our speakers. Joanna, a former partner with Aiken Group, Strauss, Hauer, and Feld, LLP, has over 20 years of experience advising clients on a wide range of employment tax, intellectual property, and other related business issues. Mark has a PhD in economics from the University of Rochester, an MA in finance from the Wharton School, and a BA in physics from the University of Pennsylvania. He's a member of the American Economic Association and the Econometric Society. And now, take it away, Mark and Kim.
Hi, Sylvie. Good morning or good afternoon, depending on where you're located. So today, we're going to cover a number of topics. We're going to provide some background in terms of the sort of international lay of the land, as well as U.S. federal legislation, both from a gender and racial pay equity. We'll talk about the trends in state pay equity laws. And of course, the most recent legislation in California's new pay data reporting law, and we'll get into the nuts and bolts of that. And then finally, we'll talk about pay equity audits and how that pay data reporting really dovetails into that. And then we will leave a little bit of time for questions and answers. And any questions that are raised during the webinar that are not answered, we will make sure that we post them shortly after the webinar. Okay, with that, next slide. Okay, in the last few years with the Me Too movement and Time's Up movement, gender pay equality has been gaining significant ground, and we'll talk about that. But in addition, to add to the pay equity spotlight, racial justice protests this summer have raised new emphasis on racial pay equity. So you'll see here, this is just pertaining to the Black and white wage gap, that it is the most severe and persistent. And according to the Economic Policy Institute, since 2000, by any way it's measured, the wage gap between Black and white workers has grown significantly. Okay, next slide. Now, when you add to that, of course, this year is probably the most tumultuous year, or certainly one of the most tumultuous years in modern history, between racial protests, racial equality protests, and of course, COVID being on everybody's mind. Pay equity has just become, more important than ever. And COVID has really brought the issue of race and gender inequality to the fore, because what it's really shown is it's exacerbating those inequalities. According to McKinsey, women are 1.8 times more likely to be vulnerable to the impact of the coronavirus pandemic than men. COVID-19 affects Black, Indigenous, Latinx, and other people of color the most. That's according to the COVID Racial Tracker. The Pew Research had found that COVID-19 had hit African Americans and Hispanic Americans especially hard financially. And so this really is just brewing to the importance of pay equity in the US. Next slide. Okay, so not too surprisingly, lawyers have predicted an explosion of employee claims related to COVID-19. When we're talking about the gender inequality, racial inequality, and now COVID with the significant numbers of layoffs and furloughs, that's creating significant risk for businesses. Next slide. Okay, so let's go into the international backdrop, and it's mostly been a gender focus. So in the UK, just 3 years ago, they first instituted pay data reporting, where basically employers with more than 250 employees must annually publish on their websites the gender pay gaps and report it to the government. And this is enforceable by the Equality and Human Rights Commission, this EHRC. But notably, the EHRC also noted race-based pay gaps. And they had done a study last year on the ethnicity gap reporting. There's no outcome report yet. And so there's definitely people watching to see if the UK also passes race-based pay data reporting laws. And in France, employers with at least 50 employees have to publish and report their gender pay index score based on a number of disparity indicators. And if the score doesn't reach a certain threshold after 3 years, employers will face stiff financial penalties. I believe it's 1% of the total payroll. Iceland has even a narrower, well, actually, the employers with at least 25 employees have to be independently certified. So this applies with even broader scale because it's down to employers with at least 25 employees. France, it's 50 or more. UK, it's 250 or more. Spain has its own rules with regard to employers with at least 50 employees. Switzerland with at least 100 employees. There's also some notable non-EU regions, including Victoria, Australia, and Ontario, Canada. And notably, all of this international, mostly gender-focused pay equity laws have started since 2017. So we're really only talking about the last 3 years that all of these laws have gone into effect. Okay, next slide. Now let's focus back to, across the pond to the US, and we'll talk about the US legislation regarding pay discrimination based on either race or gender. Okay, so 1963, we have the Equal Pay Act. That was only gender. And in a nutshell, employers must pay equal wages to men and women performing jobs that require substantially equal skill, effort, and responsibility, and are performed within the same establishment under similar working conditions. And the 4 justifications for where there is a gender-based pay disparity are seniority, merit, a system which measures earnings by quality, quantity, or production. This is basically if you're getting paid, say, by the number of widgets on an assembly line, and your pay is based on the number of widgets that you produce, for example. That's the 3rd factor. And then the 4th factor, a differential based on any factor other than sex. This 4th factor is the one that creates the largest gap in enforcement, where employers have used this, quote, a differential based on any factor other than sex to justify gender-based disparities, pay disparity. So now in 1964, a year later, we have Title VII in the Civil Rights Act. That applies more broadly. It's not just gender, it also covers race, ethnicity, religion, national origin, and it contemplates those same 4 justifications. However, the burden is much lighter on the employer to justify the pay disparity. And so that's been a question of enforceability. There's some other differences in Title VII, and you'll often see Title VII and the Equal Pay Act claims together. With respect to gender pay discrimination is not just a violation of the Equal Pay Act, it's also a violation of civil rights. Okay, next slide. Okay, so there's been a couple of other, since this Civil Rights Act and Equal Pay Act, there's been a couple of additional laws that have added to that. In 1978, there was the Civil Service Reform Act in 1991, the Civil Rights Act of 1991. It increased compensatory and punitive damages for intentional racial discrimination in hiring and firing, increases damages for intentional racial and gender discrimination in employment, and also provided the right to jury trials in Title VII cases. Okay, next slide. Okay. An additional layer in federal law with regard to gender and race discrimination, and focusing here specifically on pay reporting or pay inequality, there's the Equal Employment Opportunity Commission, the EOC. And EOC was basically created as a function of Title VII, and it had instituted this EEO-1 reporting, which is basically designed to collect workforce gender and race ethnicity data from employers. That's been going on for a long time. The new item, and this is really part of this kind of Me Too Time's Up movement. There was this component 2 reporting to that EEO-1 report. The component 1 is just really basically the census information of the gender, race, and job positions of all the employees in a workforce. It applies to employers with at least 100 employees. But the component 2 added in the pay element. So basically, for each employee, not only did you need to identify the race, gender, ethnicity, job position, but also their pay in a number of pay bands. This was instituted under the Obama administration, but in 2017, it got halted by the Trump administration. And then there was litigation with women's advocacy groups. And as a result, this component 2 reporting was required for the 2017 and 2018 years, but it seemed to have stalled after. So it wasn't required for 2019. But with the incoming Biden administration, it very well may be that component 2 may be reinstated. So that's kind of the very broad brush overlay of federal law with regard to pay discrimination. And so what happens is there's a sort of absence of comprehensive federal legislation in terms of achieving pay equality. And there's this void perceived by many states, and then they can come in to fill that void. And overlaying all this as well is the importance of diversity. So when you look at, for example, in the EEO-1 component 2 reporting, you see folks who are paid, each person paid by their gender and race within each job category. But another nuance that's very important is, well, okay, so everybody who is a manager, there's pay equality, let's say. But then when you go up to the executives, they're mostly men. So it's another thing is, even if you have pay equity on the level of each level, so that there's women and men are being paid, quote unquote, equally. But if there are no women on the executive level, so you can say, well, there's no pay discrimination, but there is this other issue of lack of diversity among the higher levels. And so pay equity is not just about equality or pay parity within each level, but also the distribution of among races as well as gender in the different job rankings. Okay, next slide. Okay, so we're talking about this void, and what are the state trends in pay equity? Well, among them, there's 4 sort of main categories. The first one is expanding the definition of substantially similar or comparable work. And that applies to California, Illinois, New Jersey, Massachusetts, Oregon. Not surprisingly, they are what is often thought of as blue states. And what they've done is expanding this definition, as you may recall, when we were talking about federal law, basically was sort of thought of as equal pay for equal work, and it was taken more literally. And what these blue states have done is really kind of broaden that. So it doesn't have to be equal work. Rather, it's just substantially similar and comparable work. And so it allows more people, more genders to, it allows a broadening of the job category so that you can have more folks to compare to, and you don't just narrow it out. So you can imagine if you are an employer and you could, and I'm not saying that employers do, but it would leave room for employers to kind of monkey around with the titles. So you can say, well, those aren't equal positions. But it doesn't matter, because under at least these state laws, it doesn't need to be equal or identical. They just need to be similar or comparable. Another area is limiting the affirmative defense against pay discrimination. And that's California, Colorado, Connecticut, Maryland, Massachusetts, et cetera. You can see that list. And what that trend, and as you can see, these all have really happened in the last few years. What it does is these states have increasingly limited what is a bona fide factor. And as you may recall, I talked about that fourth factor in terms of justifying a pay disparity. What these states have done is they said that, well, this fourth factor, it has to be job related and consistent with business necessity or a similar type of limitation. Can't just be any old factor. I mean, if you look at the Equal Pay Act, the statute just talks about it in terms of a factor, any factor other than sex. Well, actually, in these states, it's not just any factor other than sex. It needs to be a bona fide factor. It has to be related to the job. Okay. And then we've got another category in terms of trends is these salary history lands. Just in the last 2 or 3 years, we've gotten this significant number of states and local jurisdictions that restrict salary histories from being required to be disclosed. So, in for example, when you're doing an interview or when you're, considering a job applicant, a lot of times employers, at least in the past, have used that person's salary as a negotiation point for what that person will be offered. So if you have two individuals, one currently has a salary of $30,000 a year. Let's say Susie has a salary history of $30,000 a year, but Joe has at his prior position, he was making $40,000 for whatever the reason is. That's just a data point that an employer will use. And it's not, certainly intentionally based on gender, but you're like, well, Susie was paid $30,000. I think she'll come here for $35,000. Whereas in Joe's case, well, he's making $40,000. He isn't going to come for $35,000. So let's offer him $43,000, for example. And the notion is this kind of systemic gender discrimination that goes on is part of why Susie was making 30 and Joe was making 40 at the prior job. And the idea is to prevent employers from being able to ask about it is a way to kind of level the playing field. And this would also apply from a racial pay equality as well. Another area are these equal pay safe harbors. So for example, in Massachusetts, it is a complete defense under Massachusetts law for employers that within 3 years and before an action is filed against the employer, if the employer has conducted a good faith, reasonable self-evaluation of its pay practices and can show reasonable progress towards eliminating pay gaps, it's a complete defense to Massachusetts claim for pay inequality or pay discrimination. And notably, the employer doesn't actually have to eliminate the pay gap. The safe harbor applies as long as the employer is actually making reasonable progress. Similarly, there is in Oregon, which just came out in July of 2018, employers can It's not as broad, it's not a complete defense, but employers can avoid emotional distress and punitive damages if they've conducted a pay equity audit within the last 3 years. And again, similarly, can demonstrate reasonable and substantial progress towards closing the gap. Again, does not have to actually achieve the elimination of the pay gap, but rather making progress. And sort of what reasonable progress means is going to vary by state to state. Colorado has what a lot of people call safe harbor light. So it really only applies to liquidated damages, as long as they conduct a thorough and comprehensive pay audit within the last 2 years of the complaint filing. And, most importantly, the way each jurisdiction interprets what each of these terms are, that's going to be, jurisdiction by jurisdiction dependent. Okay. Now, next slide. Now, an additional areas are this increased emphasis on pay transparency. So New Jersey has the Diane B. Allen Equal Pay Act. Colorado has the Equal Pay Act for Equal Work. New York City Comptroller is calling for the public disclosure of EEO-1 reports to Standard & Poor companies, these very large companies. Now, what this is showing kind of a trend towards more public disclosure. For Colorado, they have proposed their proposed rules, like the Colorado Equal Pay for Equal Work Act, that goes into effect in January next year. Now, there are some pending proposed rules that are designed to increase job transparency. There are these job posting rules, and again, these haven't actually been finalized yet, but they may very well be starting in January. Basically what it has is it's basically going to require Coloradans to basically disclose or publicly post the salary, bonuses, commissions, and benefits information for their quote unquote promotional opportunity jobs. So as long as you have one employee, you got to post this information. The proposed rules have really sort of expanded what that, how broadly these job postings should apply. It's controversial. There's some question as to how enforceable it is because it's so broad. So for example, you have one employee in Colorado. Does that apply? There's some questions on that, but it is importantly a law that is intended to increase transparency in terms of jobs that are being posted by employers. Okay, and then there's also another factor of California requiring diversity on boards, and California tends to be the harbinger of a progressive law. SB 973 that went into effect this year expanded a prior law basically to include not only gender but underrepresented communities in terms of identifying that having a underrepresented communities on publicly traded company board of directors. And in the private sector, for example, Starbucks has announced a tie to executive compensation to increase minority representation in its workforce. So there is this trend in California to both requiring and in some cases going ahead and just doing it without any such requirement, but to increase diversity on board of directors. Now, cut to this year and going into effect the beginning of next year is actual pay data reporting. So Senate Bill 973 basically goes into effect January 1. And I'll talk about that in a minute in detail. But so we have here like a map here that's talking about pay equity, pay transparency protections, and you see the blue states, in this case, the light blue states, according to this map, there's more protection, whereas under the dark blue states, there's less protection. And it is, not surprisingly similar to sort of what, in this all over the news election cycle, blue states versus red states or purple states. Okay, next slide. Okay, sorry, we just talked about this. Next slide after that. Okay, so SB 973. So this is really the first state that is requiring pay data reporting. And what you'll see when we get down to the weeds of it, SB 973 is very similar to EEO1 Component 2 reporting. So who is affected? Employers with 100 or more employees that are federally required to file that annual EEO1 report. And that EEO1 report, that was really the census information. It's not including the pay information, that component 1. That applies to private employers with at least 100 employees. So basically, this is reintroducing component 2 reporting. Now, what does that include? It's that component 2. So that is for all the individuals that are in the employer's workforce, their employees, their race, gender, job position, and pay are required to be reported. And this will be due, the first one will be due end of March next year. And this is something that'll happen annually. So every March 31st, you're going to have to report for the applicable period of the prior year. And, some of the questions that has still not been spelled out, and we're waiting for further instructions or regulations to flesh out SB 973. But in the, SB 973 doesn't specify its scope in terms of which employees are covered. Obviously, if you're a California employer with California employees, that's going to apply to you. But, what if you're a California employer, but you have employees in California and outside of California? Do you have to do it for the ones that are outside? Not super clear. Well, what if you're headquartered outside of California and you got a few employees in California, but overall you have 100 employees? That's also not super clear. So we're waiting for further clarification. It should be coming from the Department of Fair Employment and Housing, which is really the governing agency to implement SB 973. So we will see. And how are employers going to be affected? Well, with the full extent of enforcement not yet determined, the law expressly aims to receive, investigate, conciliate, mediate, and prosecute complaints alleging, and to bring civil actions pursuant to various actions under California law, which includes California Pay Act. Okay, next slide. Okay, so we're going to get into the weeds now of SB 973. So it's, as I said, it's very similar to the EO1 component to pay data reporting. So you've got, you've got about 10 job categories. And so what you're going to do is for each employee based on race, ethnicity, gender, you're going to basically identify what positions they are into one of these positions. So, executives, senior level managers, and officials, first or mid-level, professionals, technicians, sales workers, admin, support workers, craft workers, operatives, laborers, and helpers and service workers. These are the identical categories in the EEO1 reporting. Next slide. Okay, so this is what the former EEO1 report looked like. And you'll see the job category, and the first one is that sort of executive senior level officials and managers. And you'll see a bunch of salary bands, and then you've got the gender, and you have the race and ethnicity information. So you're going to have to fill this type of chart out. Now this one is for the EO1 component 2, so we shall see exactly what format is expected for SB 973, California Pay Data Reporting, but it'll probably look something like this. And the salary bands that are identified here, this is not necessarily going to be the same band because, you know, that will change each year. But it's going to look similar to that. Okay. All right, next slide. Okay, so what we're looking at, as we had talked about, it's this annual pay data reporting, and it's going to look at a snapshot of your pay period, and the employer can choose between October and December 31st of the prior year. So right now you are in, if you're an employer with 100 or more employees and you fit in that category, you're in your potential snapshot period. So you know, that's what's going on right now, and you'll be reporting that next January. And you know, you're going to provide this kind of report. Again, we're not sure exactly what the report's going to look like, but it'll probably be similar to what we've seen in the EEO1 reporting. And so with that, let me turn it over to Mark.
Thank you, Joanna. Welcome again, everyone. I'm going to start off with a bunch of question marks here, picking up where Joanna left off. Joanna referred to the old EEO1 component 2 form, and that's absolutely the correct form. But we'll be building on that shortly. So let me just go through some of these issues here. Where are we in terms of guidance right now? So the Department of Fair Employment and Housing, or DFEH in short, does have a web page on pay data reporting, and I should have put it on this slide, but it's dfeh.ca.gov/pay data reporting, all is one word. And the last time that they updated that was just November 2nd. So they're trying to fill out questions and answers there. And I can tell you what they've said so far. So the specifics are not published yet, but they are conscious that they are following in the footsteps of component 2 of the EEO1 report, and they're trying to conform to that as closely as possible. I think it was just on the 10th that they the bidding for vendors to provide services closed. So they're bidding. They're essentially indicating that they're contracting out the portal design, the data collection aspect of this. But from their comments, it sounds like it's going to be on their website. So you'll go to a .ca.gov portal, but that's going to be constructed and managed by a vendor that have currently been bidding for that work. And one of the, I would imagine that the one who did the work for the EEOC, which is NORC, is probably in that bidding as well, because I think they did a pretty good job with component 2. So it may be, we're expecting that it will be as similar as possible. Some other issues: the file format, DFEH explicitly mentions the CSV format, so that certainly will be allowed, and that may be, following NORC, that may be the only format that will be allowed. Okay, so one or many files, again, following what we saw with component 2, it's likely to be one file that would cover all establishments, job categories, salary levels, and hours worked. Right, okay, so next slide, please. Okay, so here is an example of what component 2 actually looked like. So what Joanna referred you to would be for a very small employer who wanted to fill in all the information essentially by hand. That would be the appropriate form to use. But the vast majority of submitters to component 2, and virtually everybody who's going to submit to SB 973, is probably going to find it easier to use a spreadsheet. So given their intentions to follow component 2, I thought it would be worthwhile to take a quick look at the format of the submissions for component 2, because they're trying to make them as similar as possible. So it's most likely, like I said, going to be a single CSV format. The main columns here, going from left to right, the first several columns are indicating the employer, a particular establishment, the establishment's address, and an industry code. There are a couple other columns here that were specific to the component 2, but that's basically the identifying information about what entity are we reporting information on. And the final 5 right columns are the sort of the meat of the pay data and hours reporting. So here we have job category, which is coded into 10 different numerical levels. Then a combination of gender and race ethnicity, and those are alpha characters, and so there are 14 of those. Then there are the 12 pay bands, that's the 12 salary bands for annual compensation. And then finally, the number of employees that fit into a particular job category of a given gender and race ethnicity, and within a certain pay band, that total employee count, and then the total number of hours they worked that for the year based on the employees included in your snapshot period. Okay, so one of the things, so this is just to give you a sense that you're probably going to be making submissions for those of you that have to make them, all in one single upload that covers all establishments and breaks them down in this type of format. I want to just focus here. If you look at the job category column on the towards the right here, you'll see there are different numbers here which correspond to the 10 EEOC job categories that they've been using for many years. And you see that there are a number that are 5, and that refers to sales workers. And this is hypothetical data, but I just want to focus on that because you can see that we have sales workers at 2 different locations in this fake data. On the next slide, please, we're going to focus some more on those entries here. So here we have a sort of zooming in on those sales workers. So this is looking at those sales workers, and it's combining the data for both establishments. And so that's why this is entitled a consolidated, this would be like a consolidated report across all establishments. So that the columns A through K are different genders and race ethnicities. And then the first column with the numbers in it, that's representing the different salary bands. So here, 7 of the salary bands are appropriate to these, or applicable to these sales workers. Some have been admitted with no workers in them. And so you can see here that workers are falling into different salary bands, sales workers are falling into different salary bands, and that varies across gender and race ethnicity. Now, the reason, what we're sort of diving into here are some of the ways in which your data could be summarized by the Department of Fair Employment and Housing, where they might be looking for patterns and comparing it both across your own establishments, if you have multiple establishments, and across different firms. So one of the things that you see here across these different gender and race ethnicity categories A through K is that the weighted average annual salary band, which is right below the first table, runs from a low of 3 for race and gender I, up to a high of 7 for race and gender C and K. So even just looking at the data as it's been submitted, you're going to get these kinds of, you may see variations like this across gender and race ethnicity, or more importantly, the Department of Fair Employment and Housing may see these variations. One of the things that I did here, though, in this constructed data was to say, well, what if it were the case that some of these groups were all paid the same hourly rate, but they're starting at different points in the year. So it just so happens that of gender and race A, in the A category, some people just started, and so they're from an annual salary point of view, they're in a low annual salary, number 1, whereas people who've been there the whole year are receiving the salary band 7. Okay, so it's a matter of how long they've been with the company, and essentially, I constructed this so that for A, B, C, and D, they're actually all paid the same hourly rate, but they've been with the company for different periods of time in terms of this past year. So you get this variation from a low of 4 up to a high of 7 in terms of average, what would appear to be salary variations, and are in terms of what was paid out over the year, but they're not pay differences really. Okay. So then there are a couple of statistical tests. I won't spend much time on them, but the point that I'm trying to emphasize there is that formal statistical tests, either of sort of the weighted average comp or of the distribution of comp across gender and race ethnicity, the red is indicating strong differences, okay, that are being found. And so in particular, you can see that the group that are in salary band 4 of gender and race ethnicity D are really standing out from the other ones like A and C, even though they're really all paid the same. So this is where the opportunity for comments and qualifying remarks might be useful. Okay, next slide, please. Okay. So now, as we saw before in the last slide, these are issues that we're not even controlling for differences in wages that are due to legitimate business factors. So, for example, I haven't talked to you about the gender and race ethnicity groups I, J, and K, which are paid differently, but they're paid differently because of justifiable factors. But just to continue with this issue about how your data may be processed and sort of some of the inferences that might be made from it. We have hours, right? So we know that where some groups have worked lower hours because they have been hired for a shorter period of time. They haven't been employed for the full year. So we can make those kinds of adjustments. And those have been done in this slide here. And so here, even though A through D are paid the same wage rate, because of the way the data is grouped into these salary bands, adjusting for hours, average hours per employee, we don't get the same answer. We get a variation across A through D of between $30.90 to over $39 an hour. So we're getting substantial variation because of the way these salary bands are constructed and reported. And again, statistical tests are indicating pretty substantial effects here. Okay, that we do have substantial implied wage variation. So again, this idea of making use of whatever room there is for submitting comments is useful, but as I've said, we're right now. I was just talking about people that are paid exactly the same underlying wage rate. Going beyond that, which you're inevitably going to have to do, most likely, is getting into data that's not even being reported on SB 973. Okay, so it doesn't take into account any other legitimate business factors besides these broad job categories. While there's scope for submitting additional comments, employers need to first be sure they understand the sources of those apparent pay differences. So you need to know what is driving pay differences. Why are different groups on average coming up with different average wages? It's not just an hours effect. This has been illustrative, but there are many other factors that are driving compensation differences, obviously. So that's where a pay equity audit really comes in, particularly ahead of time to these filings to get on top of this. Next slide, please. Okay, so that was sort of a detailed, quick look at the kind of data and the kind of conclusions that might be drawn from it, and how important it is for you to get out ahead of those if you do find that you need to submit these data, so that you can be prepared to explain the implied wage variations there. So the issue then, I just want to step back here and talk more broadly about just the overall enforcement mechanisms of SB 973. So the Department of Fair Employment and Housing may seek an order to compel an employer to comply. They're able to see who's supposed to be submitting these data from the Employer Development Department. And so they'll be looking for employers with, as Joanna said, we're not exactly sure how they're defining things, but where there's at least 100 employees, however they're defining it. And then the DFEH has expressed authority to submit, to issue subpoenas and so on, and to seek court orders for compliance with SB 973 filings. So there's a fair amount of enforcement teeth available here. Next slide, please. Okay, one of the things that comes up with pay is the degree to which an employer is or is not transparent about their pay practices, both internally and externally. And so SB 973 has a lot of language about confidentiality. So individually identifiable information in the annual pay data is considered confidential, and government workers are subject to penalties. If it were be disclosed, it's illegal to disclose it. However, so there are these safeguards to protect confidentiality, but they're maintaining this data for a long time. So it's going to be they've got to maintain it by the legislation for at least 10 years. And they're going to be using it to create their intention is to create publicly public summaries of data, maybe by industry or by location or whatnot. So it's nothing supposed to be individually identifiable, but that the data is hanging around within the California government systems for at least 10 years. In addition, it's not just the DFEH who's going to be working with these data and enforcement issues and studying these data, but the Division of Labor Standards and Enforcement may also request these data for their own enforcement issues and investigations. So there are two distinct agencies within the California government that will be have access to these data and be analyzing them, and they'll be there for 10 years. And then finally, any data that is produced, there's always the option for plaintiffs to seek that data through a subpoena. Okay, and it's not clear whether those will be successful or not, but that is a concern that regardless of confidentiality, a plaintiff can seek a copy of the annual pay reports from their employer and or potentially subpoena the reports from DFEH. Okay. So we've covered sort of that there is enforcement, some enforcement teeth behind this. Confidentiality is offered here, but is by no means bulletproof. Let's move to the next slide, please. Okay. So what are the limitations of this pay data? I've already tried to illustrate those with our discussion of hours and total pay, annual pay. So almost, as we saw, the reporting does break the data into job categories, into 10 job categories, which is differentiating skill, effort, and responsibility, bona fide factors to some extent. But it's like just a first step, right? There's beyond that, there's almost no accounting for the 4 legitimate business factors that Joanna outlined and described that are permissible under federal law and the California Equal Pay Act. So variations beyond job category and average hours worked, there's still a lot of room for explaining wage variation. SB 973 reporting provides the data that show whatever the raw pay gaps are present. So you're showing your raw pay gaps, and there's not much that's explaining those. Accounting for additional legitimate business factors will likely reduce those raw pay gaps. But so where there are wage differences, though, as I said, those legitimate business factors are not reported. There's room for that maybe in the comment section, but you need to know what their influence is. So this usually depends on having conducted a pay equity audit in order to be able to provide specifics. That's what that in terms of the commentary qualifying remarks section. The reason that you need to do a pay equity audit typically is that there's a tendency for inconsistencies and subjectivity to enter into compensation decisions. Some of the sources of subjectivity and inconsistency are where compensation decisions are delegated to multiple authorities throughout the organization, where there have been changes in compensation decision makers or authorities over time, or where an organization lacks complete documentation regarding how compensation has been set. Okay, so that's some of the reasons why you may find yourself unable to offer completely specific explanations as to why there are apparent pay differences between different genders or different race ethnicities. Okay, next slide, please. Okay, so how does a pay equity audit fit into this, into addressing these shortcomings? So it's a statistical and empirical analysis of your workforce that identifies pay disparities, which are liabilities, not just by looking at the raw pay gaps, but by placing statistical weights for legitimate business factors that defensively reduce the raw pay gaps revealed under SB 973. Okay, and then it's important to realize too that a pay equity audit is potentially privileged, and that depends on the mechanisms that are put in place and are observed. But this is important because the degree of transparency that an employer provides regarding the pay equity audit should be considered and preserved as a separate choice from the conducting of the audit itself. And it can be when the proper legal safeguards are maintained. In addition to just uncovering pay disparities, a pay equity audit helps you to identify the root causes for why the pay disparities exists. For instance, are there commonalities of location, position, management, or a hiring cohort that align with pay disparities? Are there commonalities that can point a finger towards a potential explanation? Are pay disparities as evident among recent hires as they are among retained employees? That can be informative as well. And a good pay equity audit can help you address those types of questions. Importantly, a pay equity audit also quantifies risk. So it helps to devise the right remediation strategy and to track progress. So remediation is a broad concept, and it's not just pay adjustment. That's one dimension of remediation. A second one is the addressing of root causes and the mechanisms that are giving rise to those pay disparities. And a third is potentially identifying missing information that may be related to legitimate business factors that would further explain compensation decisions that are illegitimate. Okay, why are compensation levels different? Well, there are reasons for it, but we just don't have it in our data. And so by quantifying the risk, it also quantifies the value of that additional information. If you can resolve a apparent pay disparity by bringing in additional data, it tells you how valuable that data is. So pay equity audits also, and this is something that Joanna alluded to on one of her slides, to systematic differences that are not liabilities. For instance, if women are underrepresented at higher levels of management or positions with higher managerial responsibility, that's important to know, right? Because even though it's not an immediate liability, it can be hurting your diversity and inclusion efforts and be hurting recruitment and retention. Okay, next slide, please. So as I alluded to a moment ago, pay equity audits use statistical analyses, and this is just pointing out that those same types of statistical analyses, predominantly heavy use of regression analysis to control for legitimate differences, come into litigation outcomes as well. So you're using the same sort of tools that would be used in a litigation environment as well. These tools come into play both in the evidentiary phase in terms of determining whether or not there's discrimination, and also in terms of applying remedies. And so these big cases with Uber, Western Digital, and SystemX have all involved the same sorts of statistical techniques that are used in pay equity audits. Next slide, please. Okay. So given SB 973 filings are just around the corner, our recommendation, Trusaic's recommendations, that organizations should be proactive and get started right now. A couple motivational quotes in this regard are from some of our former presidents. There are risks and costs to action, but they are far less than the long-range risks of comfortable inaction. John F. Kennedy. And in any moment of decision, the best thing you can do is the right thing. The next best thing you can do is the wrong thing. And the worst thing you can do is nothing. And that was Theodore Roosevelt. So one sometimes encounters employers who think they're better off not knowing about what pay differences they may have. Again, though, that ignores the issue of privilege, right? That is important, and it's important to discuss and to preserve. It's unlikely to be the case that not knowing is going to be beneficial in the short or the long run. The pay gaps are there whether you look for them or not. Pay equity audit helps you to quantify that risk, and it's going to be significantly more cost effective, most likely going to be much more cost effective than coming into this after the fact if litigation or regulatory investigations are already underway. Okay, and again, SB 973 is turning up the heat on this as well, and the priority of it. Next slide, please. Okay, so how to get started here? So there are two broad approaches. You could buy software and try to do this yourself, or you could do it in a partnership. These are often called as do it for me or do it yourself, but I think it's a bit of a misnomer because when you involve outside experts, you're really forming an external partnership. And that has a number of advantages. The predominant one, though, is it lets you focus on where you're an expert on your people and your organization, and how this is going to translate out, and how to move from identifying issues to implementing remediation, the multi dimensions of remediation, rather than dealing with statistical analysis and cleaning and validating data and consolidating data, and then being on top of all the jurisdictional and regulatory differences. We provide this triple of data expertise, analytic expertise, and regulatory expertise that we've put together in this wonderful triangle here, to let you focus on your strengths and to make you win in terms of being able to deliver on ensuring and moving towards true pay equity and a true understanding of diversity. So, in more concrete terms, obviously we're saying it's ideal to get started with a pay equity audit, but if you're not ready to do that, we do offer, Trusaic does offer a no-cost pay gap risk assessment, which will help to identify pay differences requiring explanations. And if you want to take a step back even from that, we're happy to answer your questions as well. So with that, Sylvie, you could launch our first poll question, which is, would you like to receive a free pay gap risk assessment from Trusaic? And we'll leave that open for the few minutes that we have left remaining. And in the meantime, I think we'll see if we have any questions from the participants. And maybe I'll ask Joanna whether she's been able to look through any questions that we may have from participants. And if not, we have some other poll questions.
Yeah, we're, obviously we have limited time, but one question is, will the DFEH provide guidance to employers how to use the analysis Mark has shown? I can imagine that employers will use different methodologies because it's a confusing exercise. So the question is, will the DFEH provide guidance on how to do the pay equity analysis?
I can't speak for the DFEH, but they're really, their high priority right now is making sure they get the nuts and bolts of reporting in place. And that's distinct from a pay equity audit. So it's just making sure that you understand, as Joanna said, all the unknowns that are out there about when you need to file, and then making sure that the salary bands are identified, that the EEO1 categories are clear, and that the mechanisms for reporting your information are clear. I think that's where their priority is going to be, the midterm, near and midterm.
Yeah, I would concur. I mean, basically, the DFEH wants you to just give them the data. They're not really going to be focusing on how you can do the analytics to determine whether or not you have a pay gap. They're going to figure that out for themselves. So that's where the risk is. You're giving them all the raw data to show that you have a pay gap, but they're not, their focus is not on like how you can show that legitimate business factors justify it. So it's really incumbent upon you to do that analysis on your own.
Right, and just to follow up on that, you are going to have pay gaps, right? And that just comes from just the distribution of men and women in different roles. So you are going to have pay gaps, and the DFEH is going to be looking at those. So we have any other questions, Joanna?
I don't think we have time for anything else. So
okay.
We've got less than 2 minutes to go. So we want to look at the
we have some
yeah, I think we need
poll questions, or should we turn it back to Sylvie? Here we go.
Oh, okay.
Poll question two. Do you have employees in the state of California? And I'll try to read this answer. I think this might be the one that we have. If we give this just a few seconds to fill out, then we'll be able to read that into the record here. And it's a dead even split, 50%, 30 in terms of respondents about having employees in the state of California. So that's very interesting, 50-50 there. Okay, we have one more poll question, which we could do in the next 30 seconds. Have you already conducted an annual pay equity audit? By this, we mean something that predominantly presumably would use regression analysis to control for legitimate business factors that explain weight differences in compensation variation. differences in compensation. And here we are at 30% have conducted a pay equity audit, and 70% have yet to conduct a pay equity audit. So that's good news for the 31% who have, and encourage the remainder of you to really seriously consider it. And with that, we'll turn it back over to Sylvie. Thank you. Thank you for for participating.
On behalf of HR.com, I'd really like to thank our sponsor, Trusaic, and our presenters, Joanna Kim Brunetti and Mark Dwyer, for providing us with this very valuable information today. Also, thank you to the audience for participating. We will be sending you an email with your credit information within 24 hours. You'll also find the credits in your View My Credits page of your HR.com membership profile once the webcast has been archived. Your feedback is important to us, so please take a moment to fill out the exit survey that opened in a new window of your computer. Also, I added a link into the chat if you wanted to grab it from there. This concludes our webcast. Enjoy the rest of your day and stay safe, everyone.